What's up, everyone? Welcome to the Crypto Market Wizards podcast. Today, I'm joined by Daryl. How are you doing today? Are you enjoying the pumps?
We are so back.
We are
We
so
are
back.
so back to the golden age of the super cycle.
You think it's a super cycle? Where do you think we are? Are we in the first third, second third, like last final third of the market, like the bull cycle? What's your read on the situation?
Yeah, no, this is actually a great question because it's a lot more difficult to answer than you would originally think. I think the
Yeah.
simple answer is we're in quadrant two of the four quadrants. I
Okay.
think right now you can sort of basically look at the past and conclude that the pump from the cycle lows, which is 15k BTC, all the way to like 69 or like 72k BTC, was like the first test pump of the cycle. And then breaking that 72k mark marks us getting into the accelerated phase of the cycle, which is now where you see BTC break from 74 up, and now we're at like 80, 86 to 88. And hopefully the top is somewhere between, call it 100 to 250k. It's a pretty wide range because I have no idea where it's going to be. But this is sort of the part of the cycle where your friends start calling you, your friends' friends start calling them, and everybody's asking you, is it too late to buy Doge now? And so I think this is the next however long, maybe call it 3 months, 6 months, 9 months of quadrant two, is where all of it becomes worth it. All the grinding that you endured over the last 12 months of chop becomes worth it if you play your cards right.
Right. Yeah. And in the past couple of days, I've just been staring at the Bitcoin charts, just admiring the green candles. And I've been getting texts from my friends saying, "Hey, like, should I sell my Bitcoin here?" Like people that I've never talked to in like a year is like started texting me. Do you think we're entering PVE season? Right. The past, let's say, 2 years, maybe mostly some PVE in the Bitcoin and Solana ecosystem, but mostly been PvP. Uh, is this a time where a rising tide lifts all boats, and we'll see some form of an alt season that we've all been dreaming of?
Yeah, I think it's pretty obvious by now that you've sort of entered some form of PvE territory. I think but this isn't a broad sweep across the board. I think it's particularly pronounced in Bitcoin and most recently Doge. These are the two names that, as of today, we've seen show, you know, the price performances that you typically would not be able to imagine. Even something like 3 weeks ago, right? I could not, for example, to put it into perspective, I was considering shorting Doge at 19 cents because I think it topped, and because I thought that the general market was over positioned in Doge as a Trump trade with, as yeah, and I was invalidated like 3 hours after I put on the short, and thankfully, I never took it again because Doge proceeded to double in the next week, which is insane. Like, and Doge was a name I've looked at quite a bit in the past. If you recall, we were trying to play the Cabo death trade
Yeah,
sometime in 2023 or earlier this year, and like our most euphoric bull case thesis was like Doge going to like 13 cents
I
from like
remember
8
that.
cents. And that was like,
Yeah,
okay, if Doge can go, can have like a 40% move, we'd all make it. And in the span of 1 week, Doge proceeded to put on like $35 billion in market cap on Elon Musk and the Department of Governmental Efficiency. So it's absolutely insane. It caught almost everyone I knew by surprise, and it's well deserved if you did catch it.
yeah, I remember. I think we talked about it in our last podcast that we did. It's I think 2023 or so sometime like a year ago or so, like ish. There was like this research report, like just like circulating our Telegram chats saying, "Yo, Kabosu's gonna die. It's time to long Doge. Price target
Yeah.
12 cents or something." And everyone's like, "Yo, this is the pump, right? This is the final Doge pump." And now Doge is just going parabolic. The meme coins are going parabolic. So I have a question about, I guess, how you're positioned. I think the last time we talked, you mentioned that you want to denominate your portfolio in Solana. So if you're going to buy an altcoin, you better outperform Solana and then maybe rotate back over time. Is that still your case, or do you think denominating in Bitcoin, ETH, or other assets make more sense to you?
So I never advocate for Solana over Bitcoin. I think that's just a function of your risk preference. If you feel that you're not ready to wake up to sort of 10% intraday swings, probably don't have much like that much exposure to Solana. But if you are ready to risk it for the biscuit, then yes, I do think Solana is still the choice asset that you should denominate in. It's quite interesting because it's both. I would consider it both as a beta play, meaning it's sort of the preferred beta choice for exposure, and to an extent, it also has alpha aspects to it as well. Mainly because with the Trump win, it's very likely that a Sol ETF will start being discussed again, and that can provide additional boost to Solana, especially as it starts flirting with all-time highs. I think it's only logical for Solana to challenge its all-time highs and eventually surpass it, given how Bitcoin has performed.
Yeah, I think Solana hit a market cap all time high, but not a price all time high. And I also agree. I think it'll eventually get there. The transition for me personally, recently in the past month or two, has been just me embracing meme coins, and this has been a hotly debated topic because after Trump won, the argument for I guess DeFi or utility coins is that like now the fee switch can happen. People bought meme coins because financial nihilism, all these things are worthless governance tokens. And now that Trump wins, like maybe these things can be worth something. Uh, do you have a perspective or an opinion on, I guess, memes versus utilities or like utility coins? Like, what are your thoughts on the entire argument there?
I think definitely Trump winning has strengthened the thesis for utility coins. The problem that and reason why I still typically stay away from utility coins is because even if you have fee switches turned on, typically then you start using conventional valuation frameworks to look at a lot of these DeFi protocols. And let's face it, I think a lot of them aren't considered particularly cheap by any standards. And if they aren't, they also aren't showing growth metrics that would warrant a very high growth period. So I don't think it's useful for consistent outperformance. For example, with coins like Uniswap, which is already trading at a pretty hefty valuation, I think you do get some knee-jerk reactions for protocols that don't currently have fee switches on that do intend to switch them on. But that's more of a short-term catalyst play than anything. I think on the memes, the general market has shifted towards trading attention, and that's really been the theme of this cycle. And I don't think Trump winning is going to change it all that much. But maybe in the future, when specific regulatory policy is laid out by the new legislation, perhaps you can have more conducive pumps on, you know, I guess, upcoming DeFi protocols with very strong growth rates. But I don't see anything right now that currently fits that bill. I think the protocols that have product market fit will continue to re-rate upwards, regardless of whether Trump was in office or not.
Yeah, I think the theme of the cycle has been asset selection. If you were in memes, Bitcoin, or Solana, you've done really well, but everything else has been it's okay, So I still think the asset selection is really important. And speaking of which, I think the the cucks have a question. I was asking for questions on Twitter, and people have asked me, like, is it time for ETH? Bitcoin, put in a God candle, right? And if you remember last cycle, I think Bitcoin just started pumping in December. It surpassed 20K in December. People were saying altcoins are dead. Bitcoin dominance at 70%, and then I think January 3rd, ETH put like a 30% candle overnight, and then that was like the start of like real alt season. Of course, now there's ETH competitors, and the narrative has gone weaker and whatnot. But what do you think about like the path for ETH to hit all-time highs? It's currently trading at roughly 3,200. It's been going up a lot. ETH BTC pumped a little bit, but like, do you have thoughts on ETH? Do you think it's worth holding or trading, or do you still think that Bitcoin or Solana makes sense still?
So I think there's definitely a time and place to long ETH, mostly due to short-term catalyst-based trades, and I think you once in a blue moon, you get a re-rating sort of setup, which is what you saw basically from 2.4 to 3.4K, where you have quite a bit of outperformance from ETH. But this is not something. This is not an asset that I feel comfortable just denominating it, right?
Mm.
So I was just actually having this conversation with my team today, and the consensus was because, for example, as of today, we are long both ETH and SOL on the book, but the existing game plan is we want to be long ETH for a up till a specific time, and then once we're done with that trade, we're going to sell it into SOL. So the default is SOL, and if we have reasons to deviate from that with ETH, we'll do it. I'm not opposed to trading ETH or putting ETH on the books, but we have to be very clear that it's a low time frame sort of setup versus saying, "All right, it's okay. It's time to welcome ETH back into our lives." No, no, no.
Yeah, I think the problem with ETH is that the core holder base for ETH, like myself included, and all my friends, uh, over time we've kind of lost some incremental faith in the asset itself. So I think it's gonna be really, really hard for ETH PTC to hit new highs, even like 0.07. I'm not even sure like what
Yeah,
it's gonna take for us to get there. So I guess people are just viewing ETH as a way to accumulate more Solana or USD or Bitcoin, but it's not
yeah,
really, you know,
exactly. Like for example, I think on a steady state basis, you can have ETH BTC go to like 0.03, and BTC be like you know maybe 150K, and then ETH breaks all-time highs. I think it's possible, but like I much prefer to be sitting in BTC in that particular example.
yeah. So you think it's possible that Bitcoin goes to 150 and ETH is like at 4,200 or something and just like going sideways? Do you think that's a possible scenario?
Yeah, I think so. I think that's it can be catalyzed by, let's say, a Solana ETF being approved, and if, let's say, TradFi is convinced of the value proposition of Solana's tech, then you whatever you've seen in crypto internally, meaning crypto natives buy BTC and buy Sol, that can translate to TradFi, and then TradFi starts bidding up BTC and Sol, and then just sort of leaves ETH alone, and you get a situation in which Sol surpasses ETH in terms of market cap. ETH BTC goes to 0.03 or lower, uh, and and then you just stop thinking about ETH.
You just stop, you just forget ETH, you just erase
It
it
just
from
fades into irrelevance. Yeah, I mean, it's just like you're just like, all right, okay, it's just another coin. It's like Cardano, so or add on.
yeah. Well, I'm sure that your that statement there just initiated a bunch of emotion for all the listeners. But the problem is, I don't think I disagree. I mean, I think the probability is not zero. And that's kind of scary to think about. If you're just like 100% in the
Yeah.
uh,
So the caveat that that's not my base case. I'm saying I can see a future in which that happens. Probably it won't be as dramatic as that. I hope certainly not. But when we're looking at, like, for example, when I think about dreaming, I want to believe in a dream in which Solana can become the number two coin in crypto. Right. That's the dream that I want to be positioned for. Versus dreaming of a scenario in which ETH fades into irrelevance. That's not really a dream I want to have.
right, right. So I guess you mentioned that this is, I guess, phase two, or maybe quadrant two of the cycle. And there's this tweet from your co-founder Jason Choi. 5 reminders for bull markets. First, nail the regime change call. Second, prioritize exposure, not perfect entries. Three, just dream bigger. PvP to PvE, right? Just understand that regime change and navigate timeframes well. I think like 1 or 2 podcasts ago, the one that I did with you, you mentioned that don't forget the ability to dream big, right?
Yeah.
We all have PTSD from the bear market. We see God candles, we feel like, oh, I need to de-risk here and whatnot. So how do you change your psyche right now? Because clearly we are in some form of regime change, right? So how are you mentally preparing yourself and your body for the quadrant two, quadrant three, etc.?
So we actually do this in a pretty systemized way. I think it's very difficult to say, okay, because we're in a different regime, I'm going to start TPing less aggressively. Like even if you have the mental awareness to say that, executing it on a consistent time frame is going to be very challenging. And so how we sort of mitigate this internally is we have two separate sort of strategies on the liquid side. We have a spot strategy and we have a trading strategy. Depending on the market regime, the amount of capital allocated to each strategy differs. So in the max PVP situation, the spot strategy and the trading strategy would be 50-50. So I would have 50% of capital ready to play PvP games with people, and 50% of the capital looking to find long-term undervalued gems that we want to buy and hold. In a different regime, in this regime, what we've done is we've begun to increase the capital designated to the spot strategy, which is the buy and hold strategy, and decrease it from the trading strategy. So I still do whatever I've done in PvP. It's just that now I do it with less capital, and that spare capital goes to buying things that I really like that I'm not selling. So these things have no take profits, at least not in the immediate term. Like, for example, something I can share there would be Tau, for example. So we hold Tau. We were picking it up from 200s. We were buying it on the way up, 300, 400. And our target price for this is, at least 1,000. So I'm not scalping Tau at 500 to sell it at 620 because it's a local high, right? That kind of strat I leave for the trading book, but not the spot book. And so to answer your question, we lower the weights on the short-term side and we increase the weights on the long-term side. So the way I think doesn't have to change, but the amount I bet with changes for me. And that's how we've sort of approached this. And I think it has the least mental toll on you because, like, if I tell you, or even if you tell yourself, right, in this market regime, you're not going to take profit. You're going to start, holding for the 5x. And then you see the number on your pop account with the green PNL go to crazy numbers, and you're like, holy shit, I'm so rich. I need to take profit now. And all these things, just even if you fight it, these things just play with your mind, and it has a mental toll that you just don't need. So that's how we found the path of least resistance to do that well.
Got it. So I guess by just holding a bunch of spot, you're letting the PVE, effect just increase your overall,
Manifest, yes,
yeah, you're
correct.
just like manifesting it, it's like this
Yes,
collective 3-3 within the crypto community. Like, oh, like we've
yes,
endured so much. Let's hold it together. Let's pump Bitcoin to 100K,
yes,
ETH to 3,500, and Solana to all-time highs. And
yes.
then,
And
because, yeah, go for it.
yeah, I just wanted to add something because usually in our trading book, everything is done on pubs, which is where I'm very sensitive to losses because you can see the losses, the loss amount in your P&L for every trade, and you can also see the gain. So whatever dopamine you have, or fear or euphoria you have, is exacerbated like 5-10 times in your trading book. Whereas in your sport book, you don't see any of that, and so you can go to sleep like a baby and wake up. And even if you're down 10% in your spot, you don't really feel it because you're like, there's no like green or red number. Whereas like if I'm down 2% on Solana on the trade, I wake up and I'm like, there's a red number on my book. Why is there a red number? And then I start feeling stressed.
Yeah, yeah. And speaking of, I guess, stress and sleep, I think in the past couple weeks or so, I haven't been getting good sleep. I just feel like I go to bed with so much dopamine and so many thoughts in my brain, and then I sleep like 6, 7 hours. And I feel like at some point it's going to catch up to me, and I'm going to start making horrible decisions because sleep is very, very important. So, how are you taking care of your mental health, your physical health? Uh, yeah, just general like trader mentality, for wellness.
So I don't, I suffer from the exact same thing you suffer from. I think what's healthy is to find activities which require you to have proper separation with your phone or your computer. So it can be anything from like swimming, it can be anything from like running. I think even if you go to the gym, you a lot of times you're still on your phone, which is not great.
Yeah.
So pick up hobbies where you really just have no access to your phone for like maybe like 1 or 2 hours, maybe not too long, given it's a bull market, but like at least like a 1 2 hour stretch, and then you come back. I think I find that it really refreshes you mentally, and I think Elon Musk is sharing this as well. He's saying how people can use video games to engross themselves and actually de-stress when you're like completely encapsulated by the game. So I think everybody has their own sort of preference. I personally started picking up Brazilian Jiu Jitsu and started
Oh,
rolling
okay.
around on the mats a bit with Jason. So that's my stress relief. Submitting people in real life as opposed to the markets.
Yeah, yeah. In the markets, you destroy bears, and then in real life, you destroy your
Yeah,
co-founder. Yeah,
yeah.
yeah.
He destroys me immortal.
Yeah. And I got this question from the audience, from Mr. Magic Murph. Like, how do we not fuck this up, right? Because clearly, it feels like this is a time to focus. This is a time to lock in. This is a time to make, like whatever, like generational wealth, like achieve your financial goals and whatnot. Uh, how do how does someone like not fuck up? I mean, it's like a broad question, but do you have any thoughts on, I guess, like best practices for not blowing up, like catching major narratives, etc.
Yeah, I think the first thing, and I've said this so many times, I'm like a broken record, is do not use leverage. But even and by extension of that, I think the biggest mistake I see people do is increasing their bet size as they get more confident. And in
Mm,
bull markets, everyone is a genius. So when you start the bull market, you're still transitioning from that BVP mode. You're still generally quite aware of risks. You're pretty disciplined in your setups, and then you start making money, right? Because in a bull market, everything goes up, and as you make money, you get more confident. You're like, oh, I'm pretty good at this. My net worth has gone up 50% in the last month. I feel like a king. I feel like a champion, and then you start sizing up because your brain tells you you're good at this. You've been making money. Whatever you're doing is working, right? And this is typically the biggest mistake people can do because as bull markets go on, the risk reward of the longs that you have begin to decrease. This may this doesn't always happen in practice because sometimes the last leg of the parabola is the most violent. But in general, the if you're considering the margin of safety you have and the risk of ruin if you're wrong, the risk of reward actually significantly decreases as time goes by. And so the biggest way that you blow up and lose everything is let's say you make 2 to 3 x's, multiple 2 to 3 x's in the first quarter of the bull market, and then you call it 5x your book in the first 3 or 4 months, which is pretty commonplace, especially if you're running smaller size books. There are no liquidity constraints, and then just as you feel like a king, you find a great opportunity to do something that your friend passed to you, and you decide to slam half your book into it. And this is like month 4 from the start of the bull market. And funnily enough, a leverage flush happens, you get wicked out, and all of a sudden you realize you just lost half your net worth on something that you probably would never have taken if this was month 1 of the bull market. So I think that is the biggest or most common way I see people just give back all the gains they've made. And the most important thing about bull markets is it's not how much money you make, but how much money you keep. And I think that latter part is significantly underappreciated by most people because they're all too busy being caught up euphoric over how much short-term gains they've made.
Hey, Taiki here. If you're enjoying the content, please like and subscribe. I don't run YouTube ads or have sponsors on this channel, so I'd really appreciate it. Your engagement will help this video reach more people, which will allow me to book better guests in the future. Now back to the episode. It's so true what you say. It's really easy to make money in a bowl, but really hard to keep it. And one thing that I learned last cycle is I was okay at taking profits. Like something would pump, I sell. I feel good about myself. But the problem with the bull market is that you're going to be on CT a lot. You're going to be on crypto YouTube a lot, and there's always the next play. There's always like the next shiny thing. You know, and the problem with selling something to cash is it's so easy to just buy something new. It's like this dopamine. Like you're always chasing the next dopamine hit, right? I was
Yeah.
like doing this like earlier, right? Like last night, I was like just buying like random coins because I'm like, oh, like it's pumping, and then I'm like, wait, I should go to sleep. And then I just sold. And I'm like, okay, what am I doing? Like I never would have done this 3 months ago, but now I'm
Yeah.
just like buying random shit. So like how do you control yourself? How do you stay humble? Like what types of like mental resilience have you built over the years to make sure that you're not having this dopamine addiction? I think that's like the biggest problem with people in crypto is that they have this dopamine addiction and they're always looking for the next hit, and at some point the risk of ruin, like you just like overexpose yourself and get wrecked.
So I think this is part and parcel. This is everyone's only human, right? Like I suffer from the same emotions that you do as well. I think what really helps me is actually having a team. So, for example, in Tangent, we all positions are transparent to everyone in the company, meaning at any one point in time, my employees or my partner can call me up and say, "What the fuck is this? Why are you long this?" And I basically have to explain to people what I'm doing with my positions. And so I think that keeps me really accountable. Most of the time, if you're managing a book or PA by yourself, if you make a mistake, there's nobody really there to catch you, right? And obviously, this is, I guess maybe you can, the takeaway from this is, uh, I guess maybe have one-on-ones with people that you trust, share your books, share maybe mistakes you made, postmortems of plays that you've done, setups you've done, see them, analyze what you did right, what you did wrong, which is also what we do every month. And I think doing this makes you very accountable at all points in time as to what you're doing, right? I think a lot of times I see people spiral is because they are operating in a solo fashion, and when they start making a bad mistake, they typically either refuse to admit it or refuse to de-escalate the mental tilt, and are basically consistently in the mindset of I need to make it back, I need to right this wrong. And what happens is you start compounding the errors and you start digging a hole that is deeper and deeper. This is an extremely dangerous and toxic way of spiraling. And it is one of the ways that you can go bust in a bull market. And it's even worse because everyone around you is winning and you feel this massive FOMO or impetus to be winning as well. And if you're not, then you just feel like you're not doing enough, which is a very, very toxic sort of emotion. So you just have to be aware of that.
Yeah, I think self-awareness is key. Like one problem that I had is like my YouTube channel went from 0 to like 90K subscribers, and I was like, this is bull market genius, right? And when we started entering the bear market in 2022, I felt like, oh, like I have to find the next coin, next coin, next coin. It was like a mental league of mine. I think this time around I'm more self-aware, and you have to, I mean, everyone's different, but everyone has to identify their leak. Like it's like this concept in poker. Like everyone has a leak. You have to plug
Yeah.
that leak, and you have to figure it out, like what that is. And I think your advice of just having one-on-ones or just having group chats where everyone holds each other accountable makes sense. They say that network is your net worth, and a lot of you know discussions are coming or going away from crypto Twitter to like Telegram chats. So
Yes.
put your thoughts out there, try to connect with like interesting people that maybe have contrarian opinions with. I think that's like the
Yeah.
really good way to um, yeah. Do you have like an example that you can share of just having a position on and someone from Tangent was like, yo, like Daryl, like what the fuck are you doing? And like is there anything you can share? I think that's like a funny story.
Yeah. So I mean, I think the Doge trade that I mentioned earlier was a good example. So when this is the morning, or rather the day of the election results, and um, Doge had run from something like 12 or 13 cents to 19 cents in anticipation of Trump winning. And at that point, Trump was just about to win Georgia, and basically the market just started pricing in very aggressively a Trump win when it wasn't yet super obvious that it was going to happen. Like, sure, one state was showing, his turnout to be much higher than anticipated, but that doesn't mean that he's going to win. And Doge went from 16 cents, it popped to 19 cents, if I'm not wrong. And so the setup to me was, hey, this has a ton of positioning into it already from crypto insiders. There's a chance that Trump doesn't win, and everybody who's long Doge has to sell it. And at 19 cents, it was the local high as well. And there was also an additional thesis point was the fact that even if Trump wins, there is a chance that it's a sell the news event. Obviously, I'm very wrong on that in hindsight, but at the time, it wasn't that clear. So I decided to put on a $5 million dope short at 19 cents. And immediately when I put it on, one of the guys looked at me and said, "My guy, that I'm not sure whether that's the right thing to do." And so I think him saying that, obviously he didn't say, that's a stupid idea. We don't shoot each other's positions down like that. But I think him flagging that he wasn't on board with it was pretty good signal for me to sort of step back and realize, okay, what I'm doing is not in agreement with the people that I trust and respect in my team. This may be some cause for concern. And so I watched it a bit. And then when the position got invalidated, I basically said, okay, I was wrong. I'm not going to look at it again. And I think this is in contrast to what I used to do before when I operated alone, which is a very common error of revenge shorting. So, for example, if Doge, going back to this example, so let's say I short Doge at 19 cents, I get stopped out at 20 cents or whatever, and then it goes to 22. A very, very common mistake is saying, "Oh, it's 22. I can reshort it here and get a better price," and then it goes to like 26 after Trump wins or 28 after Trump wins. And then if you're still stuck in that mindset, you'll be like, okay, now that he's won, this has to be a sell news, right? Everybody who longed it before the election has the catalyst is done. Shouldn't it go down? And then you just get stuck in this sort of completely wrong mental framework where you're supposed to be figuring out what to long. In fact, actually, you're supposed to be longing Doge. But you're completely stuck in reverse because of the fact that you were stubborn and that you didn't hold yourself accountable to your invalidation. And so I think this is a great example of when you're forced to be super transparent with everything you've done, and you're forced to be able to defend everything you've done to someone else. You very quickly find logic gaps in your line of thinking, and when it's there, it's clear as day. Because even if you don't realize it, someone will point it out for you. Then you're like, all right, okay, I'm obviously fucking it up somewhere somehow, and then you sort of reset and okay, mistake accepted, we move on, and then you flip back. So for us, thankfully, I shorted it once, got invalidated, realized I was wrong, backpedal, flip long. Not Doge, something else. I should have been Doge, but at least I managed to cap the downside to a minimum and position correctly for the rest of the market.
Yeah. I think, I mean, this podcast is based off like the Market Wizards book series. And I think a common theme is like always limit your losses, and don't trade your opinion, right? Don't be like, oh, I'm right, like I'm
Yeah.
long or I'm short. The market is always right. Not always,
Yes.
but like most of the time the market is right. So if
Yes.
you disagree with the market, then you have to figure out like, am I right? Am I wrong? And like, why am I
Yeah.
right? Why am I wrong? But sometimes, there's infinite opportunities in the market that you don't have to have an opinion on everything, right? There's like this
Yep.
Warren Buffett quote where, like in baseball, you stand to bat, you watch these strikes, you're out. But in investing or trading, you can just watch like infinite strikes just, pass you and just wait for the perfect opportunity. So you
Exactly.
just have to be selective and you don't have to chase everything. And Twitter is like it's just like a dopamine hell, right? It's everyone's just like sharing their wins. Comparison is the thief of joy. You just have to enjoy your own journey and just, just enjoy the entire journey and try to play the game to the best of your abilities.
Yeah. Like I think there was a tweet recently. I think it was by Draken Miller that said that basically he's consistently competing not against the benchmark but against the opportunity set. And I think that was a great sort of framing as to how I also think about the market, but I just never viewed it in that lens, which is whatever you're doing, if you manage to nail things perfectly, you are at expectations. you're not exceeding expectations, but you're at expectations. And if you're fucking it up, then you're definitely underperforming the opportunity set. So I think I love that kind of sort of high benchmark to have. It's an improbable benchmark, but I think it keeps you honest, and it keeps you hungry to consistently be the best. And yeah, so I thought that was a really good way to view things. And you're basically competing against to find the best opportunity sets in the existing universe, and you're competing really only against yourself. I think that's the most important thing. You're not really competing against the guy next to you. If you can reduce the unforced errors that you have, you're going to be that much better a trader or investor, and that's really all you need to care about.
Yeah, yeah, I definitely agree. I think one problem I had is I was comparing myself to others last cycle, and it just got me in a bad
Yeah,
headspace. And
yeah,
once you get into bad headspace, you're fucked, right? You have to get out, and if you can't get out, then you're just gonna be like unhappy and
yeah.
unmotivated. But no, there is a conversation I want to pivot to, and I think earlier you mentioned that you're long Tau with like a target of 1,000. Of course, by the time you're watching this, things can change and whatnot. But the one thing that I've really embraced recently is AI meme coins. I think last time we talked, you said that meme coin is not really my thing, but I did a podcast with your co-founder Jason Choi, and he said that we're also a long goat. So clearly, right, like funds are buying this thing. And I kind of alluded to the idea of like, go activating idle mid-curve capital. Like this is like a meme coin that funds can buy. Do you have any thoughts on that new AI meme sector? Do you think it has legs, or do you think it's like some like random fad? Yeah, do you have, like, what are your thoughts on Goat and like the AI meta?
I think it definitely has legs. I think it's the most interesting intersection between that can consistently capture people's attention. And if memes trade on attention, this is probably the highest probability of remaining relevant. I think the tricky thing is without provenance, how do you ensure that you remain relevant? Because for conventional meme coins, let's say for Doge, it's a picture of a dog, right? It's a picture of a sheep, and it doesn't need to do anything in order to remain relevant, right? Whereas for AI meme coins, it's tied to an LLM, and whether that LLM is linked to an account, whether it has a human involved or not, it's dependent on the activity and the content that that bot produces, right? And with that, I think that there's an element of risk involved in the sense that the quality of the content can decrease or can fluctuate, or the frequency of the content can change as well. And I think those two things can materially impact the ability for that bot and that meme coin to sustain attention. So I think Goat is pretty special in the sense that it's the first ever sort of meme coin that the AI meme coin that the market's accepted. So for that reason, I think it's immune to these criticisms. But I think that's one of the reasons why you haven't really seen a second meme coin that organically grew. I know Binance just is the act, but I think that's more so very suspicious trading activities going on as opposed to an organic number two that actually comes up. But I do like the sector. I think it is by far the most interesting. I think the origin story of Goat is immensely, like when I read it, I was like, holy shit, this is insane. So we are proud holders of Goat. I think given how Doge has run, the target price for this is at least 3 to 5 billion, um, and it's sitting very comfortably in our spot book.
Oh, there you go. Do you like the goatsy? Do you like the goatsy gospel?
I saw it once. I promised myself never to see it again.
All right. At least you saw it. At least you opened yourself up to the
Yeah,
goatsy
I
gospel.
did. Yeah.
Yeah. And I do want to ask this question because the Murad supercycle thesis is that meme coins will take away the speculative premium that tech alts have. And I think this is my opinion. I could be wrong. I think AI memes, if they do well, It's going to take away the speculative premium of things like Tau and like AI tech alts. Are you at all worried about that, or do you think like the AI is going to be like this macro tailwind for all markets, so
No, not
everything's
at
going to go up?
all. Not at all. I mean, if you look at the market cap of AI coins and crypto, it's tiny relative to the amount of market cap in TradFi allocated to AI, for example. This is not like this sort of red ocean type of concern where you would have competitive pressures because AI meme coins arise is basically irrelevant in a PvE situation. Like the goal is to get retail to start buying AI coins just in general. They're not yet at least. And if they can, then it doesn't matter whether you own Tau, whether you own gold. They're all just gonna break.
Yeah, so you're just like
So,
fully embracing that we're in like PvE season,
oh yeah,
and
yeah,
it's all about managing time frames, like
yeah.
managing
I
risk.
think if you were within a PvP environment, I can see the argument for gold taking away the speculative premium of Tau. But in a PvE environment, no, I think it goes away.
Got it, got it. So, we all think we're in a PV environment, but we don't really know when it's going to end. You said that we're in the second quadrant, therefore, we have maybe like a year left of craziness. That would be amazing for everyone involved.
I think
But
so.
how do you decide the time to exit, and how do you define exiting? Is it just selling into Bitcoin? Is it the shorting, or is this like going to cash farming? Is it going to be like a gradual sell over the year, like over the many months? Like how do you think about de-risking over time as we enter, let's say, like the mania phase?
I think there are definitely target price heuristics that we adhere to give us some sense of where we are. I think a lot of times it's a confluence of different signs that come together. For example, Bitcoin hitting a pivotal mark, maybe 200K, for example, coupled with the fact that my grandmother is asking me how to buy Bitcoin, coupled with the fact that maybe Russia has started buying Bitcoin on its balance sheet, for example, um, and everybody has made so much money. Everybody's on leverage all the time. Uh, all the sort of the Ponzi's, you remember, the safe moons of the last cycle are out in full force. I think when you have multiple signs like this start coming up, I think it's pretty clear that you're supposed to start de-risking. I think in general, we're going to have a couple of fake outs or sort of fake tops where you think you like the mistake is you're probably likely to call tops too early than call tops too late. I think that's generally my experience. Um, but it's never a full 180 switch. There's never It's not a situation in which one day you wake up and you say, I'm gonna sell everything, this is the top. It's always a progressive situation, right? In which let's say you take let's say if Bitcoin hits 150K. Okay, let's say very simply you have targets of like 100K, 150K, and 200K for Bitcoin. And once Bitcoin reaches 100K, very simply you take 20% of your portfolio, you put into cash, and never touch it again under any situation. And then it goes to 150K, you put another 20% into cash, never touch it again. Then it goes to 200K, then you take another 20% and you put into cash and never touch it again. And so if let's say Bitcoin parabol up to 250 and then came down, at least you would have put away 60% of the cash that you earned over the cycle, and if you stick to the plan, and maybe the 40% you lose it back, or maybe you lose half of it back. But it's okay because you took profit along the way. So I think having that kind of plan is probably more it's more reliable than believing that you can try and time tops, because I think it's very, very difficult to try and time tops. It's probably more difficult to time tops than to buy bottoms. So that is what we have planned for now. It may change, but I think that's a pretty good heuristic to use.
Yeah, I think I forget who said this, but there's also this advice like last cycle, which I did not follow, and it was I should have followed, but we should have plans in place, right? Like just maybe write down your plans right now, and of course, it's not going to be perfect, and you can change your plans over time and whatnot. But if you do sell some crypto for cash, one thing you can do is just just transfer it into your bank account, right? And it might be like a big
Yeah.
sum of money. Like see how it feels, right? And then ask
Yeah.
yourself, well, do I really want to put this back into the casino after I worked so hard to earn? Because you did earn it, right? Like, I mean, if you sell something for cash and you put in your like, you did earn that, right? And you can buy things for your family yourself. And like one thing I'm gonna start doing this cycle is I'm gonna start buying gifts for my friends, and
That's
just like,
absolutely.
and then like it's like okay, like money is valuable. It feels like money in crypto doesn't feel like real money. That's the problem. It doesn't. It feels like funny money. It
You're
feels
right.
like just,
Yeah.
yeah. So, but like when you like just create a separation between that and like just try to do something in real life, then it's like okay, like you start to appreciate the money because what you earn, like you might just get back, and all it takes is like a 30% wick in Bitcoin, which could happen. I remember waking up in May 2021,
Yeah, for sure.
down 50%. I mean, that was crazy. Like I just woke up at like disbelief. Like it's like shit
Yeah,
happens. Yeah, like you and I, like we both got destroyed in May 2021 because we were like
we
just
did.
balls long balls, and it was like holy shit.
Yeah.
Like I wish I wasn't so long.
Yeah.
So you have to
Yeah.
learn these
And
mistakes.
my recommendation of like progressively once you hit intermediate checkpoints, taking out money, I actually I realized this is actually one way of helping you not make the mistake I mentioned earlier, which is sizing up as you progress later on in the cycle. Because by default, your book will start shrinking, right? So I think that's a great way of like making sure that you're sort of in line, you're not getting out of hand. Um, so yeah, and another great way, another rule that you can enforce today even is basically promise yourself whatever you have in crypto now, it's only going one way. The money is only going out of the system. You are not putting more money into the system. If you find yourself putting more money into the system, you're probably too greedy at that point.
Yeah,
I think
yeah.
it's a great sort of heuristic as well for people who are like have been in the trenches listening to this podcast for like the last 9 months. You probably know what you're doing. You're probably trying to make it. You should not be putting any more money into crypto at these prices.
Yeah, because I guess it's like the whole overconfidence bit, right? Like
Yeah.
if you think you're as good as you think you are, then you can just take your existing stack and run it up. You don't need to
Yes.
like double down. I
Yes.
mean,
It's
in
just
theory,
greedy.
yeah, in theory, doubling down and like making 2x money feels great, but risk of ruin very important. Uh,
Correct.
yeah, I feel like this podcast is more of like a psychology lesson, just because I mean everything's pumping. We have no idea what the fuck's going on. We're all trying to like manage our emotions. Do you have any advice for our listeners today? Like I mean I ask this question like all the time, but like
Mm.
people are coming back. People are trying to figure out, oh my god, like do I buy this? Do I buy that? Like what's like the yeah, so someone has like mid five figures. They want to run it up to a million, 2 million. Uh, that's everyone's dream, right? It's like, what advice do you have to like for the legions out there in the trenches to you know not only maximize your gains but also to minimize their losses?
So I think actually the you should always have like if you're managing like a 5 figure stack, I think uh, learning the on-chain craft is actually very important. I think that's the most plus EV plays to go from 5 fix to 6 fix uh, pretty easily, I would say. I've seen enough of people around me do that with success that I think it seems to be the best way of doing it as opposed to, trying to trade perks on leverage uh, and then trying to move your stack from like 50K to like 200K. I mean, it's definitely doable, but finding early shitcoins on chain is definitely much better in terms of EV. I think you probably need to start learning how to trade sex coins when you sort of reach something like between 250 to 500K in terms of your book, because at that point you probably don't want to be, all in shitcoins already. I think that's pretty, that's too degen. And then from there you can start diversifying out. Maybe trade Bitcoin, learn how to trade Bitcoin, and there's plenty of material on Twitter or on YouTube where you can learn how to trade with proper setups. We follow a couple of the right guys on Twitter, and they give out a ton of free stuff, which is pretty good. Um, and yeah, I think just consistently self-reflection, self-awareness, looking inwards, not looking outwards, is the way to go. And make a plan, stick to a plan, and I think you'll do okay. I think the hard part of the thing I've realized is the words I'm saying, the advice that you're getting, you kind of already know it. It's your ability to stick to it and follow through, which is where so many people fail.
Yeah, like if you're like a first cycler, right? Then the OGs are like, oh, just take profits, guys. And then it's like, what the fuck do these guys know? And then you just fucking go in, make 2x,
Yeah,
and then you wake up minus 70%. It's like, fuck, I should have listened to
yeah,
those guys. But the thing is,
yeah,
you never really know, right? You have to have humility. Like, no one really knows what's gonna happen tomorrow, next week, next month.
exactly.
I guess you have to think probabilistically. Uh, yeah. Anyways, yeah, I think this is a good episode. I think in a way, I feel like doing these podcasts is a way to talk to ourselves, right? Because by saying things
Hmm.
out loud, we also internalize, like, okay, like Taiki or Darryl, like we have to fucking do this, like this is the time,
Yeah.
this is prime time, this we can't mess this up. So
Yeah.
it's also like really useful for me. Like, do you have any final words for audience today?
Yeah, I think I guess I'd say that I think you learn how to enjoy the process, especially when if you do hit significant milestones or targets that you have. Learn to go and celebrate them and enjoy them. I think it's part and parcel of sort of this journey that you've taken on by yourself. Don't just get lost in accumulating more, and the journey is just basically as important as the end result.
Yeah. And one final thought is, you said to celebrate the wins, and I think that's important too. But in the Market Wizards book series, like one trader recommended to celebrate your losses, right? Because if you only celebrate your wins, losses are part of the game. Like if you just like sad every time you lose, then at some point you're going to spiral down. So I think
Yeah,
one trader, like every time he makes or he loses a shit ton of money, he just like buys like a really nice dinner with like his wife or something, and he's like, yeah, like what, like I enjoy life, but inside he's crying. He's like, oh my god, I can't believe I fucking lost
that's
so
a
much
good
money.
way. I'm not thought about that. That's a good idea. Actually.
Yeah. So I'm gonna start doing that because, like last cycle, like I would lose a shit ton of money and I would just be fucking mad. I'd be like, God,
Yeah,
but this time
yeah,
around, I'm gonna just buy my fiance a nice dinner or something.
that sounds good. That sounds
Yeah,
pretty
yeah,
lit.
yeah. Well, I guess we'll wrap it up there. Thank you guys for watching, and I'll see you another time. Bye bye. Thanks for watching, and I hope you enjoyed the content. If you want more free content around crypto, DeFi, and on-chain farming, please check out the link in the description below for our free newsletter. Also, I run a premium community called the Humble Farmer Army, so if you're interested in that, I will also put the link in the description below. Thanks for watching, and see you guys next time. Bye-bye.